Okay, welcome back. Let's get right into the stock market technical analysis. Guys, if you're new, drop me a thumbs up if you're finding value in the content. I put out trade ideas, stock market technical analysis. We're looking for opportunities to make money in the market. So if you like that kind of content, encourage me by giving me a thumbs up. Leave a comment of any chart you guys want me to look at. And as I go along, if you're interested in learning this as a skill set and not just following along YouTube videos, then take my technical analysis course. Link in the description below. It's not a free course, but it is affordable. Okay, that's kind of the main thing. So check that out, and also join the private member group. Okay, the private member group, I go through individual trade ideas. I kind of give a little bit more market insights. If I see stuff that's kind of popping up intraday, I'll throw it up to the member group. And then we do a live stream on Saturday that allows you to bring any stock picks or charts you want me to look at and analyze. We do that for about an hour on Saturday. Okay, so join the live stream or join the group. Should be next to the old subscribe button if you've already subscribed, or there's a link in the description below to join the group. Okay, moving on. Triple Qs. We've got the Fed tomorrow, and the Fed, Jerome Powell is talking tomorrow morning, I believe, and going to go through what, this is his opportunity to, they use these speeches as opportunities to kind of set Fed policy ahead of their meeting. So if he's going to continue to be hawkish and not do any kind of pivot, then look for them to start to set the tone there on that. That's the way I'm leaning. I really am leaning, if I look at the triple Q's bigger picture, I'm leaning towards the Fed not making a pivot till we get down to our next area of big support, which is really down here, and I got to kind of clean this up, but it's really down here at about 240, 238. Okay, that's your pre-COVID highs right here, and I think they're trying to take all that froth out of the market, pre-COVID highs before they went crazy. And so I think this is the area where the Fed's likely going to try to pivot and start to, talk about not being as they're probably not going to do rate cuts, but they'll probably start talking back the fact that they think they've done enough in terms of hikes. So if the market gets down there, that's where I would expect the Fed to start to set that policy tone. Now, here where are we at today? Zooming in, you can see maybe a bear flag going on. If I go down to the hourly, it's possibly like this little bear flag thing. You've got this flagpole here. You're kind of, it's kind of messy, but you're kind of just grinding higher on this flag like that. And if this is going to play out for that bear flag, to me, it sets us up for a move down or near this target, which is about 303. Okay, that's where I think we're heading. Now, 303, if I go back to the daily chart, 303 is the area of, that's kind of your trend. That's the bullish trend that the market's been in since the mid-June lows here. So you'll see here, this is the, we had support, we held support, we held support, and I think if we head down there, we're likely going to get a reaction where the buyers step back in. So I think it's probably going to go like this. This is just my gut feeling. I think this bear flag will play out. Okay, we're flagging out. We'll sell down, hit our target. Okay. From there, bounce probably back up to the downtrend line. Again, this is your long-term downtrend line that the market's been in. We probably bounce there, get rejected, and then finally break and start to make our way down towards those lower targets. So the way I'm trading this is not changed. Looking to cover my shorts right down here at 303.80 or so. Again, we might just fall right through that level, and so we'll have to keep an eye on that to see if we do. But I think we head down there and then probably get a bounce. Okay, so that's the trading plan. Nothing's changed. Looking at today's price action, we had a little bit of bullish divergence. I pointed that out yesterday on the hourly, so I thought, okay, we might get a little bounce, and we could still continue to get a bounce. The alternate scenario is that we basically, instead of the bear flag playing out, maybe we bounce into the downtrend line again, fill this gap right here at 323, and then roll over. That's kind of the alternate scenario, not my preferred scenario, but definitely an alternate that could easily play out. And we have the bullish divergence there, so that might signal that. Again, I'm still looking to probably just hang tough on my shorts. If we rally, then maybe, there might be a little quick trade there. But I do think we probably, I'm more interested in catching this bigger move down to my targets right here. Okay, risk reward, it's just not that great to go long. If you go long right here, you've got a potential 1.5% to the upside that you could catch. And if it drops, it's a potential 5% or so to the downside. So risk reward is not very favorable to go long. There's just not that much to gain and a lot more to lose. So I'm more interested in staying short at this level. All right. Okay, let's take a look at the dollar here, because obviously the gold miners, I've softened on them a little bit. I don't think they're going down too much more. I just don't see the setups quite yet in the gold miners. The silver miners look a little bit more interesting, so I can point those out. But here's the dollar, and this is one of the things I really want to see break down. Gold's not likely going to move much higher until the dollar breaks down. So DXY, we have an uptrend line. We recently had a false breakdown right here. I pointed that out. They recovered the trend line and rallied up to make a new divergent high. So new high right here. We're kind of hanging out in that area. But the momentum on the daily is continuing to diverge. You'll see here, if I just kind of clean this up, you've got negative divergence on both momentum indicators that remains intact and has not changed. So each divergent high that we've seen recently just continues to tell me that this rally is running out of steam. So what I'm looking for likely is the next break of this trend line right there. And I got my line drawn. If we break that, we should head down to the 200-day moving average and this 100 area, depending on when we actually break. There's a trend line down there. You can see the trend line. I've got it marked out down here. So I think that's what happens. We break and head down, probably get a bounce along the way and hit the trend line. But again, I just don't see the break. When I look at the silver miners, though, SILJ, you can see that we have bullish divergence here on the daily chart. Okay. And so that was a divergent low, and we rallied and just kind of muddling around. So it's likely we could consolidate for a while just sideways, and that's kind of why I softened on these. I don't think they're going down, but maybe they'll consolidate. And then when we see the dollar break, they're probably going to start to rally. I'm looking at some of these other ones like AG. This is a First Majestic. Same kind of setup. Bullish divergence here. And they had a bullish falling wedge. We broke out. We're back testing. So we're, it's bullish. It's a bullish chart. Maybe we just chop sideways for a little while until we see that dollar break. And I'm seeing that across some of these wheat and precious metals, WPM, same kind of setup. So, and I know there's lots of lines here, but really what I'm focused on is this bullish falling wedge, this divergence telling me that we're likely going to break higher. If we if we start to break higher, we should get checked at the 200, likely get checked there, at least the initial tag of it. And then we could continue to break higher, but we need to see that dollar break. I'm really looking for everything to shape up. There's definitely a trade that's going to be here in the future on these miners. I think we just need to do a little bit more work around on these charts to get this to kind of firm up a little bit. And we'll run through the FANG stocks real quick. Apple, uptrend line right here. Negative divergence on the daily chart. We're kind of just hanging out here, trying to hold this trend line. If the Fed, brings the market down, that's when this is going to break. So it'll probably break tomorrow if it's going to happen. And that is that. I see that on Google, chopping sideways, really just no man's land. Microsoft, still below resistance. So again, we still have that bull trap in play where you had this downtrend line, resistance, broke above it, but created that bearish rise or that island cluster top, and that's continuing to remain intact. So whether we bounce up and hit the trend line and then roll down, I still think we're going down to this 257 area on Microsoft. Apple, treading water right now. Just look, it's holding this trend line. We're just in this area right here at this red trend line. And that trend line has lots of reactions as they roll out. You can see going all the way back to September of 2020, support. And, we were above it, but, kind of broke down. We're just treading water. So Likely this will reject tomorrow. If the Fed comes out hawkish, we probably reject. And Meta's, I don't have anything on Meta. Meta's definitely I wouldn't want to short Meta. I'd be more interested in shorting like Apple and some of these ones that had a pretty good strong rally. Meta didn't really have that much of a rally, so but I'm not really interested in going long it either, because it likely will just kind of get dragged lower or just consolidate kind of lower, grinding lower over time if the rest of these are going to sell off. And then oil is, this is oil futures. We're just kind of treading water right now. I suspect oil is going to continue to rally. Looking at the XLE, that's your oil stock ETF. You can see you've got an uptrend line here. So you see I've got it marked out support, 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 and we bounced off that latest support there on continuing to rally higher. So oil continues to trend higher. There was some negative divergence back here, and that's where we got this big pullback to that support line. There's the negative divergence on oil. We got the pullback though, and as of right now, if I clean this chart up, because it gets kind of messy, you'll see way down here at this most recent tag of support, we had bullish divergence. So right in there, that tag of support, when it hit that trend line, was a divergent low, okay, on the momentum indicators. So oil still continues to remain bullish, not looking to short oil. It's not in an area I'd be interested in going long. You really want to buy it down here at support. But until we see anything different, oil rallying should continue to put pressure on the CPI, and the Fed has to get in front of that. They're behind the curve on inflation, and if they have any hope of doing any damage to the CPI, they've got to get ahead of it. They've got to get more aggressive. So I don't think the Fed is going to back off, at least their aggressive rhetoric. And that's really all the market's going to trade on. The Fed is not going to be able to raise interest rates that high. But what they'll do is come in with aggressive rhetoric as much as they can while not raising the rates too high, but still talk the talk. That will bring the market down. Qs maybe all the way down to our 240 level. And if that happens, then you should see commodities start to sell off, and the inflation, the CPI will start to come back some more as the market comes down. And all the while, the Fed will have not really raised interest rates that high. They just continue to talk the talk tough without actually doing any action. But that's what I think the attempt here. That's what I think how the market's going to play out. So I'll get the video guys out there. Guys, drop me a thumbs up. Leave a comment on anything you want me to look at. Or if you guys have any trade ideas or charts, leave a comment. We'll take a look at it. And I will catch you guys on the next one.